Well, hello, and this is going to be the final video for IME 315 this quarter. And I have only 2 slides in this video. And the first slide is basically summarizing the key takeaways that I want you to go away from this class with. And I've tried to design this class so that you'll be able to evaluate projects in your professional lives, but also use some of these tools in your personal lives. And so with that in mind, the first key takeaway I want you to consider is I wanted you to have a workable knowledge of financial statements. So understand what the key parts of financial statements are, and key ratios. And then when you start to evaluate projects, you need to consider all costs. So unit material costs, direct labor costs, and overhead costs are for an individual project, or product, an individual product. But also all costs that are necessary and are necessary to be understood. And I'm going to go back to those in just a second, but what we want to do is evaluate a project on the basis of its after-tax performance variable. Key thing, after tax. Okay, so taxes are important. They can be up to 30 to 35% of the costs associated with a project. So you need to understand the impact of taxes on your project. And your performance variable is either going to be the net present value, the annual worth, or the internal rate of return. And typically in industry, internal rate of return is used the most, along with net present value. Annual worth is not used as much, but if you're evaluating various projects, 2 or more projects with different lives, depending upon your assumptions, annual worth may make the calculations easier to do. Now, what I want to talk about is a very practical problem that I've put together in a startup that I'm working on. And basically what I've done is I've taken all the tools considering costs and revenues, similar to what we did with the project for this quarter, and calculated the after-tax net present value and internal rate of return. And then I've developed the financial statements for this project company driven by the calculations from this after-tax net present value. So, for example, my revenues feed an earnings statement. My investment feeds a balance sheet. My earnings that come off of the income statement feeds the balance sheet, as well as a cash flow statement. So I've taken my project and I make a simple but comprehensive set of financial statements that an investor might want to look at. So that is why I'm trying to tie this all together, that ultimately an individual project or multiple projects, the data from those will feed the financial statements of a company. My final point is that when we do an analysis on a project, I want to make sure that you do a sensitivity study on the performance variable. So your Y variable would be net present value, internal rate of return, and your X variable would be your independent variable, would be the variable that you're trying to do the study on. So now what I want to talk about right now is something that you probably are most concerned about, which is the final exam. The final exam will be effectively a take-home exam. It will be emailed to you on Monday, December 5th at noon, and it will be due, uploaded to Canvas, by Tuesday, December 6th at 6 p.m. So that's 30 hours. And I won't be available 100% of the time, but I would send me a text message. I prefer not to have an email because I won't be necessarily sitting on my computer, but I will have my cell phone with me so I can look at a text message. Now this this exam will have 12 problems in it. That's what I'm looking at right now. And obviously I've got less than 12 bullet points here, so some of these are going to be combined for some of the problems. But we're going to have a couple problems on break-even analysis. That can be the life of a project or the present value to make the life of two projects where they're equivalent, or the present value of one project to make it equivalent to another project, something like that. I want you to be able to do an internal rate of return analysis for more than one project. So if we're comparing multiple projects, how do we pick the best one using internal rate of return analysis? And that requires doing incremental analysis. I know there's a video out there on incremental analysis. That being said, if I ask you to do a problem with one method and you do it with another method, I can't give you a lot of credit for that problem. So if I ask you to evaluate a problem using annual worth analysis and you do it with present worth analysis, then I can't give you a lot of credit for that. If I just ask you to evaluate a project, you can do it on any one of those three methods: annual worth, present worth, or internal rate of return. Now I'm going to talk about here, there's going to be comparing projects with different lives. And my comment on projects with different lives is that if you can assume repeatability, annual worth is the best way to do it because you can just do one analysis. Present worth, you need to find a lowest common denominator for the lives of the projects. If you cannot assume repeatability, you need to compare them on the basis of the longest lived project. So even though one project has a 5-year life and one project might have a 7-year life, if you can't assume repeatability, you need to evaluate it based upon the project lives all being the same. Now, the next bullet point is there's going to be a problem, and it's not going to be a simple problem. It's going to involve the prepayment amount of a loan. So as you recall that when you prepay a loan, what you owe on that loan is basically the present value of the remaining loan payments. There's going to be a problem that's going to involve calculation of material, labor, and overhead costs. And the material cost, I believe, is the most complicated, but labor costs involve taxes and other components associated with labor. I want you to be able to do a little bit of ratio analysis, which means you need to understand the key elements of the financial statements. This is an open book, open note test, so just have the ratios are probably not fresh in your mind, but have them available for reference so that you'll be able to put that together without too much work. And then I want you to be able to calculate a project's after-tax, that's the key thing, after-tax net present value and or internal rate of return. That means you're going to need to include depreciation. Recognize there's 3 types of depreciation: straight line and makers, as well as bonus depreciation, which is going to be phased out over the next 8 years or so. I will specify which type of depreciation method that I would like you to use. So I believe this is, obviously the exam is open book, open notes, and I think it's going to be fairly straightforward. I'm not going to try to trick you with anything, but I think it typically, my expectation is that it's about a 2.5 to 3 hour exam if you were taking it during a regular class period. So, obviously there's going to be multiple potential for overlapping exams in this time period. So, but budget your time, I would say about 3 hours to take this exam. I've enjoyed this class. I've enjoyed talking with those of you that have hopped into my office hour or called me or texted with me. I hope it's been useful for both your professional and personal lives. Thank you.